Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by James Hughes, who is a Chief Market Analyst covering the UK and Europe at AxiTrader. James, pleasure to have you in today. How are you?
Very good, thank you very much. Great to be back in.
Good stuff. Well, look, Christmas is coming. The markets are getting fat.
Yeah.
Asset prices are rising. I mean, you look at the S&P, you look at, well, cryptocurrency, certainly Bitcoin. What's your take on this, and what are investors thinking? We're coming into the end of the year. Is it a time to take profits off the table? Is it time to pick up some cheap pre-Christmas bargains, because 2018 is going to be another stellar year? What are your thoughts?
Yeah, well, I mean, you've got this whole situation where everyone is obsessed with stock market rises. I mean, all people want to talk about is the fact, oh, well, the Dow's up, whatever, and all of these points. And yes, they are, but of course there are other things out there. And what we've got in terms of those big equity markets is just the fact that they're rallying on the back of nothing anymore. We all know this, and they're rallying on the back of tax reform in the US and the fact that that should be happening, which is always a little bit dangerous to me. So there is that, and we have got that obsession. But there are these other areas. Look at the Nasdaq. Look at that. The fact that those tech stocks are really getting hit at the moment. To me, that's an interesting story that sort of doesn't really get the publicity it's supposed to. And if you look at those tech stocks, and we look at, when we talk tech stocks, everyone sort of focuses on those FANG stocks, don't they? Facebook, Amazon, Apple, Netflix, Google, Alphabet, whatever you want to call it. And those companies are outstripping everything, as we know. But there is this other side, this Nasdaq side, which is falling lower without those massive companies. Now, those other massive companies are having blips, they are having some sell-offs, but we talk about these tech stocks being hit particularly hard, but when the biggest ones really aren't there. And there is that worry that in these big tech stocks, is there something sort of not bubbly? I mean, I'll talk about bubbles in a minute when we talk about Bitcoin. But the fact is that these tech stocks are particularly, they've been overblown. Just take Uber, for example. Uber, the value of Uber continues to rise continuously. But all it is continuous bad headlines. So when you get something like that where the value continues to go up, but the headlines are always so dreadful, that always worries me a little bit. Netflix is another one where you have a situation where the subscriber numbers always go up, but all the CEO keeps saying is, well, we're losing money here, we're losing money there, and we're looking to aggressively expand. And again, that's a little bit of a worry, because it's divergence in terms of what it's supposed to be doing. Now, I'm not sitting here telling you all those FANG stocks are about to explode and Apple's not going to be worth absolute billions by the end of the month, but still, it's there are worrying signs in there, and that Nasdaq is getting hit a little bit and is a bit more negative.
And well, let's talk about Bitcoin. A bubble. It's a very interesting, or certainly headline-grabbing story at the moment. Onwards and upwards. Breaches 10,000, sells back down, eking back up today. All a bit of smoke and mirrors. Is there substance in Bitcoin? Has it drawn in investors that probably don't understand cryptocurrency, and more importantly, with the potentials of blockchain?
Yeah.
Where are we at with Bitcoin?
It's drawn in a lot of these traders. I don't understand Bitcoin. I've been in the industry for 15 years. I don't understand Bitcoin. I'll be the first to say it. No, I don't understand, but I don't understand. I haven't given myself the time to get into the background of exactly what it is, what value it possesses, why is it here? And that's my biggest issue. Why is Bitcoin there? And that's the answer.
Lehman's and the banks, and the problem is, well, it was set up pretty much just after Lehman's, and we had the financial crisis where people lost trust in the banks, and some bright spark with a lot more technical, I can't even say it, let alone technical knowledge than you or I probably put together, has created this, and it seems potentially to be the future, as the internet was back in the day. But again, it comes down to investors not necessarily understanding the product. I mean, in the internet bubble, people would buy anything with .com on the back of it,
of course,
on this premise that it was all going to go up.
And that's a similar thing now, isn't it? When we're seeing anything cryptocurrency, it's just got this backing to it. But I think what you've got at the moment is a selection of traders who got into Bitcoin at these lower levels, $800 odd, who are now sitting there thinking, well, what an amazing trade. And of course, what an amazing trade it is. $800 to sort of $10,000 is a pretty unbelievable move. But what you have is those selection of people who are talking about this amazing trade. talking to their friends about this amazing trade and saying, you've got to get on Bitcoin. So there's all of these other people that don't necessarily understand it, aren't necessarily traders, but are looking at an opportunity. Now, this doesn't just happen in Bitcoin, this happens in everything. It happens in the stock markets, where everyone's saying, I've bought the Dow, it's gone up however much, you should buy it as well. So this is a very similar thing. But Bitcoin obviously isn't the Dow, isn't the S&P, isn't the FTSE. It is something completely different, and it is something that's so erratic. And what seasoned traders will know that maybe some other people don't necessarily know is that if something rallies or rockets up like what Bitcoin has done, the fall's just as aggressive, if not more aggressive than the upside. So we know at some point, and even we saw yesterday, the downside will come to Bitcoin. It will happen, and we'll get a fall. But that's a market, isn't it? Market goes up, market goes down. Just the worrying point for Bitcoin and investors in Bitcoin, and the worrying point for me, if I was to look at it from that point of view, is that I can't in any way predict how big that fall would be, and I can't predict how much it's going to go up. It's almost like you're flying blind. And at the moment, it's very easy to say, okay, well, I'm going to buy Bitcoin and look at the chart. Yeah, and okay, last night it fell off 18%, but it's still at $10,000. But you've got all of those other people coming in, trading, going, well, so-and-so's made this 850% on Bitcoin in the last year. I'm going to get involved. I'm going to buy some at $10,500. And all of a sudden it's 9,000, 8,000, 7,000. And that's a lot of money. It's a big, big move. And it's just that thing of not necessarily understanding why it's there or what its purpose is. Because really, as traders, that's by the by. We don't really care why it's there or what it's doing. We only care about the price and where it's going.
Exactly.
And you can't necessarily gauge, as technical analysts and you look at Forex a lot of the time, that's a key thing to focus on. Such a big move is hard to predict in most markets, but we can do it. In Bitcoin, it's almost impossible. And that would be my worry.
Understood. And finally, 2018, we're going to have, obviously, QE, certainly from the US for starters, being withdrawn or reduced. Bond buying programs, maybe, or well, in Europe we're going to see it, Bank of England, etc. This withdrawal of liquidity in the market, will it cause a problem?
Well, I think what's interesting with this is that you have to take the Fed as the shining example of this. Maybe they're pulling this stimulus out, but there is this tax reform plan, which is the backstop, which is to say, okay, well, we've got some negativity coming from this, but we've got upside that the tax reform is going to create. So that is. There's a lot riding on the fact that tax reform will come in. Now, with the Fed, we've got a new Fed chair coming in. Jerome Powell will come in. He was speaking just yesterday. And his tone seems, at the moment, of course, very similar to what Janet Yellen is, and gradual rate hikes. But we know there is a situation where this balance sheet has to be withdrawn. We know the ECB, similar discussion. We're talking about maybe mid-2018 before they look to act and do anything else at all. So there is potential that 2018 could see these type of moves. But can the markets withstand it? Again, like you talk about Bitcoin, equity markets have rallied so strongly. We know that when the upside is so strong, the downside can be equally as aggressive, and that would be my fear.
On a shorter time frame.
On a shorter time frame, and if you start taking out this headline stimulus, then you could have an issue.
Okay, well, we look forward to 2018. Hopefully it's not tin hat time, or maybe I should be asking Father Christmas for one in a month's time. But in the meantime, James Hughes, as always,
thank you very much.
Great to have you on.
Thanks.